inviting me here and putting me next to a very educated, intellectual gentleman. So what I could promise you is that I've read a little bit about this gentleman. He's amongst the brightest minds in the BFSI sector. He's actually leading a biggest financial services unit and is amongst the very few marketers that have been able to balance growth with brand building. And I'd be very happy if you guys have any questions in the middle or something, and as we structure this. So very warm welcome.
Thank you, Vivek, for a very kind introduction.
So in the brief meeting we had just before this, I was trying to dig deeper into what he does on an everyday basis and what makes his brand different from the others. And there were two things that were really coming up. One is the fact that it comes from a parent brand which is almost it's a homegrown, synonymous with a household brand in the country when it comes to banking finance, which is HDFC. And the other thing he was talking about is trust. The fact that brings along a lot of trust. So the first question that I'd actually sort of pitched to you is that the consumer now, unlike yesteryears, doesn't have a limited choice of media vehicles. So he's got TV, he's got streaming, so even when he's on a scroll, every scroll in a way is a decision for him, whether he stops or he goes beyond that. And you have an overarching aim, which is whether it's whatever KPI you're chasing. Now, how do you sort of allocate ROI and how do you deal with this sort of, scintillating scope of media vehicles?
Yeah, so it's a slightly complex answer, to be honest. At a P&L level, it's very black and white. How much you're spending and what's the revenue that you're getting, right? But when you look at a channel level, right, every channel behaves very differently. Now, even within the open market, when you look at Google behaves very differently as compared to an organic channel. So there's a difference between, I'm sure, I'm just trying to dial up so that everyone understands what I'm trying to say. In an organic channel, people come to you because of the content that you put out in the online universe. They've read about you, there's awareness about the brand. They've typed the brand name and they are wanting to download and install and wanting to your services, right? So the activation levels for organic customers is much higher. The ARPU is also higher, right? But when you look at the paid channels like a Meta or a Facebook or a Google for that matter, here you are somewhere trying to push to an audience who we think will be a potential audience who's looking for these services. And here the behavior is slightly more measured in the sense he or she will come, he'll check your services, your platform, do a experiment, test and try with you. So what I'm trying to come at is we have to look at revenue from a point of the customer life cycle for different channels. Like the organic customer who's come to you because he has already bought into your trust, he's already bought into the benefits that you're providing, is much more front-ended in terms of his engagement with the brand as compared to a paid channel who's come into you but takes a little more time to warm up, right? So the entire revenue concept today is from a customer lifecycle management. The customer may not completely be ROI positive, for example, for the first 6 months, but will be positive for possibly after a year or so. So tracking monthly as to how each channel and the customers in each channel are behaving and how do we engage with different months. For example, we've seen that post the 4th month, across all channels, there's a drop in engagement. Now, for various reasons, one might be, I've done my investments, I don't want to do anything more. Great, that's something that it's your goal and you have decided on a certain decision basis your goal. But what we as a brand want is that why don't you keep coming back to the app at max to check your portfolio, right? And when you check your portfolio, is there a way that I can cross-sell to you, right? And again, it's actually very linear journeys, right? For example, if someone is looking into who's bought into a mutual fund, can I sell a stock to him? Someone has already bought into a stock. Can I sell him a basket? Or ask him to buy stock at less at a MTF, which is called margin trading fund. So basically, different flows happen across different customers, different channels. So that's why I said it's slightly complex. But coming back to the same question, revenue from a P&L perspective is black and white. But revenue when it comes to channel-wise, it's got a different journeys and different time periods.
Wow, that's exciting. So as you say, complex is actually becomes rather interesting. Because I don't know, I mean, if I were you, and simply when we look at it from an outside perspective, we say, okay, there'll be a high value investor, there'll be a ultra high value investor, and then there'll be masses, and then there'll be youth. And one would, I mean, psychologically want to divide it this way. I mean, for a novice, that's how we do it. But, you bring in this very interesting point of lifetime value and, this drop off sort of that pivot point of 4 months. Now, this takes a lot of science. So, this would need a lot of mathematics, and you'd be, I mean, I don't know how many metrics you work with. So, I mean, when you're looking at these, are you looking at the net worth of the person? Are you looking at just reach? Are you looking at more resonance than reach? Because these are also complicated phenomena, and each one of them would need different messaging. And then you're saying, there's a cross-sell nudge. What's the right time to nudge the person? And, in your case, actually, I mean, it's far more difficult and far more complex because, I mean, it's not just advertising that gets you trial. It's basically trust that gets you trial, then trial gets you conversion, then conversion gets you a resale. So how does this come together for a CMO?
Let me just bring this together in my head also because we do it on a day in, day out basis. But let me put it this way, okay? So to your point, Vivek, we have more than 45 cohorts. So it's not four broad segments, 45 cohorts. Say, I'll just give an example of one cohort. 18 to 25, living in tier 3, invests in mutual funds, wanting to try to invest in stocks, and has a behavior to sell faster to earn a quick buck. As compared to a 35 and above, living in tier 1, tier 2, work in a corporate, wanting to look at long-term investments. Doesn't want to sell, but want to build wealth. Then there is 45 and above, and so on and so forth. There are 45 such. And within that, there are traders. There are different animals altogether. Because they do this, because there's a profession, right? They do this day in, day out. So addressing messaging to all these 45 cohorts is basically building a flow on a platform like a Clever Tap or AppsFlyer, whatever that might be, to make sure that the nudges go at the right moment and right event triggers. So the team at the back end is basically managing the event triggers in the entire flow. Once that happens, that doesn't mean your job ends there. The event flow trigger is one part, just one part of it. You add a layer of messaging to it. Like for example, if it's a 45 plus piece and I want to sell a retirement fund to it, the messaging will be way different than a 45 plus who wants to look at long-term stocks, who wants to look at baskets, who wants to look at alternative investments. I don't know. Right? So the messaging will be different. So for each of these 45 plus cohorts, there are different messaging, and within that also we do A and B testing within a sample size. So suppose in a cohort there are say 1,000 people, and thousands are less number, but for discussion's sake it's 1,000. We start off with a 10 and say, for the first 10, let's send this message. For the next 10, we'll send this message. And we see which one is going to make more traction. So it's an always on exercise to keep on optimizing so that your engagement rates are increasing. Yeah, so that's how the entire mechanism.
The moment he says 45 plus and retirement, he's sort of alluding to me. And I mean, he spoke about the first cohort, and I see a lot of you in that age group. I mean, you remove the tier 3 part, and then I think a lot of you are in that sort of space. So does it resonate with you? I mean, do you guys start and then you go slow, and then over a period of time you need another nudge to get back? Because it seems so intuitively true, but when it's coming from data, it really makes a lot of sense. But when you start working on data, then you keep your intuition on the side, and it generally does happen that these numbers look good, and you have a certain way of doing things. You have your click-through ratios. You have your, your acquisition strategies. There's a models that I've learned over time, and I'm sure these are not manual learning stuff that you're telling us. Actually, is long-term learning through CleverTap or whatever you're using. Now, at that point in time, when you're sitting there and your intuition tells you something and data tells you something, and where does the role of intuition really come? Because you're talking to a guy who's retiring, you really don't know about a lot of things that he could perhaps be. Everybody is, it's very personal in a way. Some people are invested in real estate assets, some people have education loans. So, where does that really, at what point does intuition take over from data? Simply putting it.
Actually, both go hand in hand, Vivek, to be honest. If there is an intuition which is, let me put it this way, if there's an intuition which we all believe that this is how things, happen in our heads, and that's a common truth, but there is no data to validate it. So you have a hypothesis which is an intuition, and you have data to validate whether that hypothesis is true or not. So I think intuition and data go together. They're not separate, compartments. If there is a intuition, it's in marketing and in scientific parlance, it's in many ways it's hypothesis. So proving that hypothesis through data is what marketing is all about.
And then you obsess over some theories you have, and then some of them come true, some of them don't come true, or how does this work?
Outliers are very few, to be honest. I'll give you an example on when I was doing my data science course in IIM Calcutta, and while I was doing that, I was in Calcutta in the campus. This was some years back, and it so happened that I had bought a product. Okay, it was a hair gel, and for a specific type. It's not, and that too I didn't search for it. It came to my Instagram handle. I thought, wow, this is great. It works for me. I'll tell you why also, because that specific hair gel was, supposedly they said it's climate conscious. Climate conscious, because whatever ingredients they use is natural and blah, 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 all that. I bought that, and believe me, when I bought it, I didn't type this to anyone. Neither I spoke to this about my family. It was just the thought of, it was in my head. Okay, saying that I need a cream for my elbow. Just a thought in my head. Imagine hair gel to elbow cream. Just a thought in my head. The next day I got an ad on Instagram for an elbow cream. I was like, how? I didn't even speak for a microphone to pick it up. I didn't even message on WhatsApp for Meta to pick it up. It was in my head. How can a machine predict it? So I asked my IIM professor, saying that this is completely surprising and shocking. You know what he said? He said when machine learns, humans collectively, at the end of the day, most humans behave in a similar fashion. So world over, there will be hundreds of consumers who have thought from hair gel to an elbow cream. Hence, it's suggesting you don't be surprised it's magic. It's actually data. So, you know what I'm saying? So when you club a lot of variables together, which we can't comprehend, which a machine learning can, it throws you insights, which is actually at the end of the day very logical in nature. Yeah.
That's a very exciting field, and then you come from IIM Calcutta, sort of the temple of ML now. Some amazing professors there, and I think they know the inside out of Amazon, and you talk to them, they'll tell you a priori and this and that, and it just comes so naturally. They talk like that. So association, and how many variables should you look? And yeah, fantastic stuff. So I think it's a lot of IIM Calcutta would be helping you.
Yeah, of course.
They're in a way really fantastic at this. And so logically, then you still have a decision to make whether you should go after cultivating communities. Intuition, while intuition and data go together, but there are some warm leads, there are some sort of cold leads, and there are some you'll expand in future and work on them. So you obviously must be doing a priority and prioritization will be very important because you have to hit a revenue goal, and more CMOs take revenue roles now.
Completely. And the why I say prioritization is important is because for two reasons. One is you have limited resources and you have limited time. So you need quick wins almost on a sorry, you have a limited resources and limited time, and you need quick wins almost on a weekly or a daily basis.
Yeah.
Yeah, while you have a long-term goal also, but I'm not saying that you deprioritize it. You keep on working on it, but in terms of effort, in terms of resources, where you put where is something that you'll have to, basically plan that way. Yeah.
So how do you look at the festive season? How do you look at your media plans? Now there is streaming, there is OTT, there is your social media, then there is obviously a lot of stuff where your organic consumers are sitting. I mean, they're not necessarily pushed. They're already ready and motivated to be an HDFC consumers.
Right.
So how do you prioritize what comes in first, what comes in second, what's...
The way we basically look at media is at this point in time we are looking at media only to customers who are in market, customers who are wanting to start investing, and that's a big pie in itself, right? And there is top of the funnel who we want to get to the bottom and the middle and the bottom funnel, right? So again, on priority basis, who are the first quick wins that I can get, which is your bottom funnel? That is an place I reach out to through your online channels, right? Building awareness is something which we would want to do, but when is the right time to kick that? Is something that we take a call basis a lot of things. Again, it comes back to revenue. If your ROAS is positive, right, then I know that there is a stream of funds that is going to come my way, and I can plow back that money to build awareness, which will again flow back to increase in search volumes and hence more conversion and hence more accounts and hence revenue. So keeping an eye on both long-term brand, at the same time short-term, I don't say I want to use the word wins, but short-term, customers who I can immediately reach out to, it goes hand in hand. But predicting, to your first question, predicting and estimating your revenue generation, say, okay, let's assume that, okay, got 1,000 customers in the month of August or July. Out of the 1,000 customers, 250 customers are high ARPU customers because I know how the channel behaves. I'll estimate, okay, these 250 customers will give me X revenue by, say, end of Jan. The remaining 750 will give me by end of March. That means by Jan or February next year, I will have a revenue on so and so before the next financial cycle. That means I can start planning for a mega campaign possibly in March next year because I'm very confident about the revenue that I'm going to get. So I'm trying to ensuring P&L positivity is extremely important. So the estimating is you keep buffers here and there, but more or less that's how it is.
So ladies and gentlemen, very important to get this perspective from him because I think he's actually championing a lot of stuff at HDFC. There are a couple of apps. I think there's one, what's it called? Sky or something.
So we
you have
got
one is Sky. Sky is the overall idea. How does it work?
No. So we're basically catering to all the segments of investments. We have three primary brands. One is HDFC Sky, which predominantly is a discount broking app, like the most of the competition, but it's a DIY app, okay? The second one is called Invest Right. Invest Right is also like most of the apps, but the only difference in Invest Right is there is an RM mapped to each of the customer. So the RM will also call you saying, hey, there is an IPO coming up, why don't you invest it? There is this stock recommended by research team, why don't you look into it? All of that. Then there is HDFC True, which is for the ultra HNIs. So which is like for the top 20,000 families only. So the entire spectrum is there from the time you start investing till the time you become the top 20,000 families is something we look into.
With your incentives and all, you must be in the UHNIs now.
Not really. Not yet. Yeah.
Very interesting, and I would want to know more about the record number you've hit. I've seen at your corporate board levels, you've been talking about the numbers you've been able to achieve in this online space, especially on the app. It's 500,000 or 1 million or something like that now.
We got 15 million. See, this is fallacy, something which we don't believe in. While there will be a lot of downloads, the core of the business is how many people are actually active on the app. You know, not only in this category, in most of the category, you will see an ad which says 50 million downloads, 60 million downloads. But how many people are actually interacting on the app is actually the health of your business. The second thing is we as HDFC believe in our motto is to ensure that we guide our customers to invest responsibly. The word responsibly is extremely important, especially in today's day and time when everyone feels that they are an expert in investing, right? So, there is this interesting psychological trait called as overconfidence bias. And I would urge all of you guys to read this book by David Kahneman, which says think fast, think slow. It basically talks about various aspects, but I'll just jump into it. So overconfidence bias in our category, for example, if a person has got 10 stocks and he has one profit in one stock, but he's got losses in 9 stocks. Okay. In your mind, you're thinking that I'm an expert because I have one profit in the next stock, because you're completely ignoring the 9 losses that you made. You'll go around and talk to all your friends about the one stock that you made profit on. But will not talk about the losses that you made at all. Basically, you're spreading something which is not right for the ones you're also listening to your conversation, right? So what we have as HDFC of 25 years of trust is we have a stellar research ecosystem. So our plus one, even in Sky, which is a discount broking app, there is a research page and a daily live call. If you are an intraday trader, you will get daily live calls where to invest. If you believe that you don't believe in short-term trades, then you look at short-term, which is basically 3 to 6 months. If you said, boss, this is not also my, then I look at long-term, which is basically 1 year and 2 years. So for every kind of investor, we have a plus one in terms of our research insights, which gets to the customer. So our motto is very clear. How do we ensure that consumers get the sound advice, either through a app, either through an RM calling, or through a service like HDFC True, where it's like a customized wealth advisory services.
Very well said. In fact, you brought this point about transparency and trust and this. So two questions, two closing questions on this. One is, now that you're talking about trust and you're talking about research and talking about all of this. Now there is an easy way. People are following influencers. I follow many of them. Sometimes, with the kind of conviction they talk, it feels like, abhi shaam ko hi paisa dal do. Matlab before the markets close, just put the money. And then there are houses like yours where there is investment advice coming. Now, how do you look at these influencers? That's sort of question number one. The second is, traditionally commissions have been the way to make money until Zerodha came in and things sort of changed. And I see that HDFC does take an upfront fee so that whatever advice they give is not based on commissions. So that I think is a great hallmark of a trusted product. Now, how do you look at, how did these two come about? So one is your opinion on influencers. How are they going to change the world? Are people going to come back to, or will they line up for investment advice from trusted brands like you, or would influencers have their way? Or is there a way that you work with the influencers to maybe increase financial literacy? And the other is that, are there other ways to show transparency so that this faith in markets can increase, and we see a lot of first-time investors coming in and expanding the market? Not just for your brand, I run a Business Today brand, and that sort of helps the whole ecosystem.
See, on social media, and not necessarily influencer in this category, but influencer in general category, right? If, I don't know how the consumption pattern has increased, decreased. Are people are more following for more than following? Are they agreeing to what they are saying? Is what we have to figure. So we always thought about, and we take pride in the research analysis that we do. Which, to be honest, nothing to discount the influencer community, but these are well-researched people with expertise, relevant education, that and hence are able to build and give you the research recommendation. Like, for example, 2 of the research team are the top researchers in APAC, not only in India, right? So the way we use influencers is to get and spread the right message through influencers through our research team. I'll give an example. So we had a podcast series where we got the influencer to be the host, not the guest, and the guest is our researcher. So we are basically trying to leverage on the reach of the influencer, but the message and the right and the sound advice comes from the expert of HDFC group. So it's a channel which we're using in the right way. So I'm not paying the influencer to give his opinion about a stock. I'm paying an influencer to use his platform because he's got reach to give a message which is right and sound through my expert who has done a thorough analysis on this one. So it's the best of both worlds, right? The consumer also get the right advice on a channel which he or she is following. So that's one way to look at it, but yes.
So how many of you follow influencers in your social media handles in different categories? I'm sure you must be following some influencers, unless all of you are influencers yourselves. Uh-huh. So would you actually follow an influencer for investment advice? Is it a divided house or largely no? So then that makes his job easy. So thank you, ladies and gentlemen.